Hey traders from around the world, this is Blake Anderson with Real Life Trading. I'm recording this on a Saturday. It is March the 2nd, but the purpose of this video is to explain a recent strategy that I've been implementing. It's a little more difficult because it lacks some confirmation, which kind of gives it its name that was coined by some of the traders within the real life trading community. And I'll talk about that name while we call it that. But I really want to use this video to explain the premise of it and get to the bottom, because I do have a lot of questions from traders. What are the exact parameters? What does it exactly mean? And to be honest, it can be quite scary for some traders because it lacks that confirmation that lots of times we need. So what I found out, and the reason this trade came about, is a few months ago, I noticed that some of my day trading results were down a bit. And after doing, treating trading like a business and doing some deep analysis, some back trading, all that good stuff, I came to find out that I feel like some of these algos and some of these quants and such in the markets have really exploited some of these breakouts and breakdowns and trapped a lot of people. So I said, okay, well, how can I trade in conjunction with these algos in order to optimize my trading results and help other traders as well? So that began, a journey that lasted a few months in which I found some setups and, some statistics that started to work. The trade is a little uncomfortable, especially if you haven't done it yet. And I highly recommend that you start with small shares and build at least 50 trades worth of data to give you a strategy yourself and do what feels comfortable for you in order to move forward with the strategy. So let's talk really fast. So the name of the strategy is, it's kind of coined this term, the bird box. And the reason for that is the movie, the Netflix movie Bird Box. You see Sandra Bullock with a blindfold on. Most of the movie is that, if you guys haven't seen it. There's a lot of meme references to this movie. And one of the traders said, hey, let's call this thing the bird box because it feels like you're kind of going in blind. But the truth is, it's really just a retrace buy support type of trade rather than a buy breakout, or where you buy the break of a candle within a certain range. So let me jump into some of the parameters around this trade. So we're going to look at this day right here, which is February 26th of 2019, ticker symbol ETSY, Etsy, breaking out on earnings. So you guys can see this as day traders within the real life trading community. These are the perfect gaps that we look for. So breaking, going to all-time highs. And what I do is I watch this on the open. So there's multiple ways you could trade this, right? If I was looking at this, you could go into a 1 or a 3 and try to trade this breakout, and the trade would have worked out. Well, what I found in my previous trading was a lot of times these weren't working, or what they would do is start strong, wick through the bottom, and then they would run. So for me, I said, okay, well, I don't want to buy this breakout right on the market open because I may get stopped out with that wick down. And the most important thing is that I have parameters in which I'm measuring my risk. And if that breakdown holds and it fades all day, it could turn into a big loser. So I said, okay, what I'll do is I'll wait for the first 5 or 10 or 15 minutes. That way I get sentiment on this trade. So if this holds strong for the first 15 or 30 minutes or whatever it may be, I know that there's strong buyers. There's a decent chance that this is a continuation. So the next step for me is to say, well, where can I buy this at an optimal level where I don't have to wait for confirmation that dries out my reward to risk, and I can kind of anticipate where these buyers or this support level will be. And so this sent me down this journey of figuring out, how do I measure this? Is it a percentage pullback? Do I just use one 15-minute candle? Do I use a 30-minute candle? How do I do this? So this is not a perfect strategy. Like anything in trading, it's always evolving, and there are many ways to trade around it. Traders will see this differently, and traders will come up with different areas to buy, to sell, targets, and all of that. So the purpose of this is to show you how I do it. You take the original idea, make it your own. I'll continue to update videos as this progresses, as this is a newer strategy for me. So let's walk through this trade. So we talked about Etsy, good earnings, great gap. It was on this day. So what I'm going to do is just zoom into this intraday chart really fast. And let's play this out with what Jeremy Newsom has made so many videos on back trading. It's the reason he's an amazing trader is he does the work, before and after market hours. And that's really what'll separate you. So what we're going to do is I'll go to a 5-minute chart. Let's go back to this day on the 26th. And I'm going to use this trading view feature that is a bar replay on it. All right. So if you guys aren't familiar with this, check out some of Jeremy's videos. So I'm going to hit bar replay. I'm going to keep the speed, an update every 3 seconds so we have time to talk about it. I'm going to click on this bar so we can see what happens. So I'm going to hit play. And this is going to play out what happens on the open with Etsy. Let me pause this, move this to the center of the screen. So this is what you see on the opening 5-minute candle. I'm not triggered. I'm observing for now. All right. There's our second one. Nice push. There's our third one. So some people will buy this breakout. For me personally, I have been trapped a lot over the recent months of getting this candle pushed through. This, if you get a good high wave on a 3-minute, that's a go-to for some of the traders for either a breakout or a breakdown. That's a totally separate video. So back to the bird box trade on this, or what really is just a retracement trade. So I see this on the open. This is the first 15-minute range, and you can use a 15-minute candle. We'll look at that in just a second. But this is the first 15 minutes on a 5-minute candle. So now what I'm looking for is where does a pivot come in to where maybe I can trade some retrace. So there's the 4th, there's the 5th, there's the 6th, there's the 7, right? So at this point, I'm looking at this and I'm saying, hey, here's a 10 EMA, here's VWAP, that could provide some support, it could go, but what really gives me the optimal reward to risk on this? So you could buy in here, right? This will probably come in and be some support on VWAP. A lot of institutional traders trade that. You could wait on this 10 EMA. That's one strategy. But what I've found is, hey, what I'm going to do is just put a Fibonacci from right here at this low, and I'm going to bring this up to that, what I'm going to call that pivot for now. Now, guys, I understand that Fibonacci retracements and how you draw them varies from trader to trader. Now, this is just what I've been doing and has been working great. So what I'm going to do is I'm going to go ahead and do what I do on the mic and show you where I would want to set this up. So I'm looking for this 618 retrace right here. So people say, Blake, why is 618? Why not 0.5, 0.382? Well, that comes from back trading. That comes from doing this over and over on the weekends. When my friends are out doing some cool things on the slopes, I'm sitting here looking at bar charts. And so what I'm going to do right now is this is what it would look like live. I'm going to try to jump right in front of this 618. Now, let's talk about something really fast. This 618, the beginning of this video, I was talking about some of these algos in trading. And it's funny, we were talking about this yesterday on the mic, is when you program algos, you have to put some quantitative number in there. As discretionary traders, we don't necessarily do that, but if anyone that has any experience with algo trading or programming at all, you have to be very quantitative and definitive when putting in formulas for entry. So, my theory is, hey, why not do some of these use Fibonacci retracements? Sure, I would think so. And because you have to define this on some level, and that's probably a percentage pullback. There's many, many strategies out there. But what I'm using for kind of my thesis right now is that the 618 is going to provide some support. And there's a couple ways to put your stop here. I like to put it below this 786 in case the buyers come in at the 786. I want to give that a chance as well. So what I'm doing is stepping in front of the 618, thinking that, hey, if buyers come in at the 618, I also get my fill. And this just happens to be right in front of a round number. So now I'm going to look down at this 786 and say, All right, the 786 is at the 6530 level. Well, I'm going to give it a chance right below that. And guess what? That 10 EMA on the 5-minute chart without extended hours is also going to be, you know, a level of support. So I'm giving it multiple levels. It's also right in front of 65, which is a round number. So a lot of times I would put my stop, say, right here. What I'm going to say is I'm going to give the 786 a chance to be support. I'm going to give that 10 exponential moving average a chance to be support. And I'm also going to give that round number an opportunity to be support. Now, depending on how aggressive you are, you could do a 64.95. You could move it down a little more, whichever it may be. But what I'll do is I'll just put it right there at 64.95. So now I have a trade set up 66.10 by 64.95. And this will be a limit fill. So if this comes down, I'll get filled here. If it just shoots all the way through, I'll get stopped out. In my experiences, if we push down and hold through the 786, this stock is going to do the good old break the low, stop all these guys out. Because why? Because if you have an algorithm on this, you have to program a stop somewhere. And a lot of people say, hey, if it breaks this low of the day, it's truly not a strong stock. And those algos say, okay, give me those shares because I know it'll trigger a lot of shorts or sells. I'm a bigger institution. I like that liquidity, so I'll just buy it up down here. So a lot of times that'll happen, order retrace back into this area before it grinds back up. Now let's talk about reward to risk. What happens when I buy down here rather than waiting on a confirmation candle is it allows me to take some reward or some profits off the table, and I'll just, you know, throw this up here into what most likely will be the first resistance back up, right around VWAP. So I know this is 1-to-1. It's a high probability play. Most times I like 2-to-1, and I'll let you guys decide whether or not you want to trade in thirds, halves, however you want to do it. So for the purpose of this video, let's do this. I'll just say I'm going to take 1/2 right there. And guys, I don't remember exactly the levels I used. I do have this recorded, and we can look at this after we go through this to see exactly how I traded it. But let's just do this. So what this does is, let's say Etsy comes down, does find support here. This 10 EMA also moves up to help it. And let's say Etsy is truly going to fade off all day. It's going to get sold off. Well, what I'm saying with this type of setup is that's cool, because if you push through here, fill me here, and just bounce back up to find more sellers, I'm going to be out 1/2. And more than likely, I'm going to move a trailing stop off of wherever this pivot was. So I reduce my risk. So I don't have to be right on the direction. I just have to be right on a good probability back to the, you know, a reversion back to the mean, which is usually that VWAP before it sells off again. And I've reduced risk, and I have a small winner. Now, if this continues and I'm right that this is a strong stock, you know, you can make some really nice R's on this. So let's see how this plays out. All right, so there's your next candle. So I immediately get filled. There's volume on that, and I know what's happening. People are going, oh man, what have I gotten myself into? Trust me, it happened to me for a couple months while I was testing this. I said, that doesn't look pretty. So most people right here say, hey, if this rounds here, I'm going to wait on this confirmation and maybe break 67.60 and see if this can break high of the day. Well, this is uncomfortable, and this is why we call it the bird box trade, is because you feel like you just executed an order blindly. So let's see what happens next. Uh-oh. Now we're really worried, right? We still have more volume coming in. It's hit this 10 EMA. We're like, oh boy, we're going to be stopped out of this. And this does happen, guys. I traded one yesterday, ticker symbol DELL, Dell, that did stop me out. It just went straight through. It happens. So let's see what happens on the next 5 minutes. Okay, so now you may have found a little bit of support. Now you have a couple options here on this 5-minute candle. You can go ahead and move your trailing stop up. You can see how this plays out. You have options now. So let's see what happens on the next 5-minute candle. Okay, now this is where people go, I'm a genius. This is awesome. I predicted this. All we did was use a high probability, support level, and it was scary down here. Now you're feeling like a trading legend, which you probably are. You're out half of your position. And let's do this. Let's say, all right, well, if that's truly the pivot, if this is truly a strong stock, let's do this. Let's move a trailing stop to right here. Got it? So if this is truly a true stock, a strong stock, guys, remember we're day trading. You know, we have, what, 6.5 hours to trade this. This really shouldn't come back too much if it's really going to go in the direction that you want it to. So you're out 1/2 position or 1/3 if you think this had a, you know, a big move ahead of it. And let's see what happens next. Okay, so there's your next candle. You go, okay, maybe I was wrong, and you may be. But what happened is, just because this is likely that you push back up here, you get new sellers, and if this were to fade off for the rest of the day, guess what? You were wrong on the direction, but you're out half here. You move your stop up here. It's going to be a small winner. We'll see what happens next. All right, there's a candle. So we're going to keep this running. And there's another candle. So this is all probability play. Strong push. You got the sentiment read, which is very important. If a stock pushes up for the first 15, 20 to 30 minutes, in my mind, that's telling me, hey, buyers are here to buy this thing today. Now let me do my job as a day trader and understand high probability moves. Okay, so now you have decisions to make. You can either move your trailing stop up to here, because that is the most recent pivot on a 5-minute chart. You can leave it down here. There's multiple things you can do here. You know, personally for me, since it is early and I want to see these things go pretty fast, I may not move it right under here. I may give that 10 EMA a chance, and I may just move that to break even. So no matter what, I'm going to make around the half an hour. Because remember, I'm out half here. This would be a stop out for the rest of the half around break even. Congratulations. Unless this thing gets halted and something crazy happens, you've made at least a half an hour on the day. So let's see how this plays out. Nice push, nice move. There you go. You have more decisions to make. Oh, it's finding support on VWAP and that 10 EMA. There we go. I'm just going to let this go for a second, guys. And I talk to traders all the time about visualizing, you know, how these could play out. And this is a good way, is to go back and play these and see what moves you would have made. All right, so right here, a couple things, right? It's below the 10 EMA on the 5 now. So if you want to get a little tighter with it, you can actually use that as your pivot now. So if you say, hey, 66.58 is going to be my stop, no matter what, you're going to make somewhere around 0.7 R. Okay, so let's play this out. Close. Doesn't look, there we go. So you got trailed out there, right? So that's somewhere around 0.7 R, something like that. So the other scenario is, let's just say, hey, I still feel like this is strong. I want to give it a little room. I don't mind, you know, just keeping it here and losing a half an hour. There's all kinds of ways to play this based off of whatever your rules or whatever your plan is. So I don't know. I actually don't remember how this plays off. That would have triggered there. But let's just play this out. So it found some support. Okay. Okay, I'm going to speed this up a little bit. Now, the rest really doesn't matter at this point. Wherever you put your stop is up to you. There's a good chance I probably would have gotten trailed out right there. I don't remember exactly how I played this one. Now, you know this is a new pivot. Feel free to take, you know, the other half right there or the third. If this is a swing trade, you want to keep some on for a swing trade. There's multiple ways to do this. But personally, good chance that I would have gotten trailed out up here for around 0.7 R or so. And that's just the way I trade. A lot of grinding, make a lot of trades. But there's all kinds of ways you could have traded this. So, you know, if your stop would have stayed down here or wherever it may have been, that would have hit target 2 for you. And I'll leave that up to you guys. This is breaking high of the day now. I'll leave this up to you guys, how you want to do your targets, how you trail. But the main point of this video was showing how to buy into a support level on a 618 retracement, which has been deemed as the bird box trade. So don't let that name confuse you. We just like to have some fun at real life trading and, you know, put a little spunk in these things when we talk about them and name them just for fun. So what I'm going to do is I'm going to go ahead and pause this. You guys can see how that one played out if you want. And what I'm going to do is delete this. And let me go to a 15-minute candle. And I'm going to go back and replay this one more time. And then I'll look at another one Hold on 1 second. All right, so I'm gonna leave this on a 15-minute candle. Let me slow this one back down and hit play. So same thing, I'm just using a 15-minute candle. So there's one 15-minute candle. Now you could draw those fibs off that one 15-minute candle, but what I'm looking for is the first pivot. Where does it start to reverse on me? Okay, and this is where some discretion does come in. All right, so that could have been it. Now, guys, as this 15-minute candle was shaping up, you could have been setting up your parameters. The way this bar replay happens, it just gives you the whole candle at once. So how do you know if it's a strong open? Here's one way that I do it. I will measure on that single 15-minute candle if it closes above this 382, right? So if it's above, which is what, really the top 62% or sorry, the top 38% or so of that candle. So, or sorry, the top 38 if you're measuring that way, but you can say, hey, this is an upper percentile of strength. If you really want strength, you can measure it and say this point, it's up in this this quadrant of strength within the candle. So there's multiple ways to look at this. There's multiple ways to trade this. You do your own research, but for me, I will say this qualifies if this first 15-minute candle can close up in here, and now I'm gonna wait and see where that pivot is. So I'm gonna measure my pivot here. Remember guys, we got filled here. We had our stop down here, and it worked out for us. So that's pretty much the bird box trade, guys. Don't overcomplicate it. Understand that it's not perfect, and use your discretion to set up your parameters. And remember, the only thing this is doing is finding where we can buy and support rather than waiting on confirmation. We're trying to predict based off of probabilities where support may be. Okay, so let's just say that, let's do this bar replay one more time. And I'm going to show you what most traders and what we've done most of our lives as day traders on trading these setups. So let's go back to this 5-minute. I'm going to replay this really fast. So what we're going to do is say, let's say we're looking for that same thing, except we're going to look for some confirmation. We're going to wait and be a confirmation trader on this. Okay, so let's let these play out. We know how we traded it with the bird box trader, just the Fibonacci retrace. On this one, let's wait for some confirmation and see how that plays out. So as a trader, just remember, I'm going to pause this for a second. Remember, as a trader, there's a couple things you have to do. You have to form a directional bias. Am I going to be long or short? And then you have to set up levels, reward and risk, okay? Based off of reward and risk. So let's watch this. There's your next candle. So right here, you may say, okay, maybe that's the pivot. Maybe I want to do this. Maybe I want to trade the breakout of that 5-minute candle. Now, this is, I've seen a lot of traders. This is hypothetical. So I want you to think about how that looks. Now, I'm going to do this. Here's the daily. If you look over here, for this reward to risk to make sense, it at least at minimum has to get to high of the day, but even more than that if you're doing a 2-to-1. Now, that's asking a lot, right? It could work. I've seen it work plenty of times. But for me, I want to be taking some off the table and not relying on this to break high of the day. Okay, so this is what would happen. You would have gotten triggered in there. There's your stop right there. Let's say you need a 2-to-1, so you'd have to put your reward way up here, right? If you're a pure 2-to-1 trader, somewhere up in the $70 range. If you're a 1-to-1 trader, what is that? 66.97 by 36. What is that? About a 60 cents. So let's just say 67.60. Yeah, so we'll just say right here gives you 1-to-1. So we'll say that's target 1. Let's play this out. Let's see what happens to you. All right, so we're just watching this. Looks good. 10 EMAs coming up. A lot of people may say, hey, let me just put my trailing stop right there. Maybe that's the pivot. Or you could leave it either way. Hey, looks good. Looking great. Now, remember, guys, on the bird box trade, we're already out half a position. We've already locked in a half an R. You're looking good here. Everything looks great. All right, cool. Maybe just a little retest. Let this 10 EMA work. I think now most traders are for sure saying 66.41 is going to be my trailing stop. Okay, cool. All right, so now you're trailed out for a loss. You see that? And I don't know what that loss is, but just visually looking at it, it's probably 0.3, 0.4, somewhere around that range. So you lost on the trade, while the bird box traders, because they predicted where support could be, understanding just a reversion back to that mean, and not actually having to have it push through highs of the day to hit targets, they get to say, hey, we got trailed out and we hit 0.7 R, just because we understand how stocks move, and through research and back trading, we understand that, you know, the probabilities that you get a quick bounce here, no matter what, even if it continues higher or rolls over. So that is why I personally like the bird box trade. Now, if you kept your stop down here, if I remember correctly, it works out for you. But just through the testing of the strategy, let's do this. And just knowing how a lot of traders trade, you know, this is how you limit risk. You trail your stop up once you get pivots. So, you know, that's why I like the bird box trade. Just to review, looking for what I anticipate to be support. I want to be able to take some, whether it's a third or 1/2 off, into what will be short-term resistance, in my opinion, without having it or without needing it to go to high of the day in order to lock in profits. And yeah, it's just been a really good trade. So another one really fast is SQ. Now, the reason I want to show this is because it's not a gap and go. And just so you guys understand what it means to form a bias on direction. So a lot of traders, real life trading, I know Jeremy Newsom, a lot of people said, hey, ticker symbol SQ gapped here. If it would have gapped down here, we would have thought the news was way more bearish and there was a chance for a gap and go to sell off rather than something just, you know, gapping down here on earnings. Not many people trap. So I think a lot of people said, hey, what we're going to do is we want to be long this, but how do we fade this at responsible levels? So let's walk through it. Let's see how this played out. You guys see how it played out, but let's talk about how we would have traded it. And actually, I did trade this for 2.02 Rs, and let's walk through this. So let me hit this bar replay again. And this is just going to be the 5-minute chart. So I'm going to slow this down for you guys. I won't do 3 seconds. I'll make it every 2 seconds now since we've walked through this. So here's the open on ticker symbol SQ. There's the down, there's the push. So right now I'm looking at this. I'm going, okay, did this set up a pivot for me? And I could have played it off that. All right, so maybe right here, maybe I got a late jump on it. Let me go back to this Fibonacci retracement, put it at the very bottom, and let's just say I'm going to make this my pivot. Now, guys, remember, this is an art. No science to this, where you're locating your pivot. So you say, all right, I want to be long. I think this fades up for the rest of the day, and if it breaks the previous day's high, this thing could really start to accelerate. So right here, let's go ahead and set that up. We're going to say long entry there by, guess what? Right below the 786. 75.20 there. Let's just make it below that candle as well and do a stop. You know, you could pull that down some more if you wanted to give it just a little bit more room, if you thought that it may wick down to the bottom of that candle, right? And you're going to say, hey, I want to take some profits if you get this push back up. So basically where it's trading now is where we're going to try to take a little bit of profits. And I actually traded this one in thirds because I was anticipating there's a ticker Shopify. So some of these payment companies have been on fire. So I assumed, hey, if this breaks these highs, this thing could really accelerate. So I'm just going to go ahead and set up these targets, you know, very similar. And I don't remember exactly what I had that day, but I'm assuming it's something like this. And there you go. So I'll just do 1/3. I'll just go ahead and set those targets and let's see how this plays out. So you guys see that? To make this clean, I'm going to delete these Fibonacci lines, but you see how that's right in front of the 618. The stop's right below the 786. All right, so I'm going to cancel that, and let's play it out. So remember, my thesis was, hey, I want to fade this to the upside. Right there, you're saying, oh, man, this thing is going to go without me. Doesn't matter. The only thing you can do is play your system. Now, again, guys, scary, volume breaks down. You're going, oh, my goodness, what am I doing, right? I'm blind. And I'm on the mic sometimes, and it feels like I'm, the blind leading the blind, but you have to trust your system if you know you have an edge based off of lots of back trading and lots of testing of these levels. So let's watch to see what happens. We saw how it played out. Now you're feeling comfortable. You have a good candle right there. So what some people would do right here is they say, okay, that's the candle that I wanted to see. Maybe I do my entry, back up here if it breaks here. Well, guess what? We're going to be taking some profits here. So we took the risk of stepping in front because we've done our research that this could be short-term support. So we're going to be taking a little bit of profit back up into that. So let's play this, see if we can get another candle. There you go. So this isn't a bad opportunity, right? If you say, hey, let's play it back above this, you could do like a 76.90 by this. And really your reward to risk doesn't look too much different doing that. So that's not a bad trade either, but this is the bird box. So let's push play again, see what happens. There you go. So what I'm going to do here is, this is probably what I want to do. I say, hey, if what I believe ticker symbol SQ is going to do is correct, it really shouldn't break below this. So let me put my trailing stop here. If I lose 0.3, 0.4 Rs, that's fine. I can set something back up if this breaks low of the day and give me, some volume, a volume candle where it looks like it trapped some shorts or some sellers, and see if we can run this back up. So let's see what happens. There's my trailing stop. Let's see if I get stopped out. Nope, great consolidation. Some traders here would say, hey, let's do a 76.85 by, that's 75.54, or maybe a stop here. There's plenty of ways to trade that. I like those too. Just wasn't the trade that we took. And we're already out 1/3. So actually, we wouldn't even lose 0.3, 0.4. It'd be much smaller than that. So there's the push up. Nice, nice. Okay, target 2. Let's move stop up. And guess what, guys? Everyone that was short this or sold this after and before hours, they're wrong. This thing's going to go. And I think I had target 3 somewhere in this range. So it was a nice trade that worked out. So guys, just a couple things to touch on again is, remember, you have to form a thesis on direction. And when you do that, you need to see the opening range sentiment. For me, this told me, hey, the first 15 minutes, this push up, I'm going to buy this into what I believe should be support, enough support to give me an opportunity to take some risk off, take some profits into what may be the next resistance level, so that even if I'm wrong and this rolls over, my loss is really, really tiny, break even, or a small win. Now, if I'm right on this, and because I took the risk of being a buyer into this Fibonacci retrace level, I could be right in selling into people's buying because they needed some confirmation, right? So just understand this trade. Like I said, Dell, ticker symbol DELL, we can see that this did not work on Friday. It had the makings of it. Here's the daily chart, so it was gapping up. And it just didn't work. The whole market's kind of faded off. It was a weird day, but they don't always work, and understand that you could get filled and stopped out immediately, which I'm okay with. So there's a good chance if that comes down and takes out your stop, this one will roll over and take out lows of the day. So guys, that's the bird box trade. You can also do that to the bearish side, where you have something, a gap and go to the downside, to the bearish side, and say that, I don't know if I've played one recently, but you say that you get a gap and go to the downside, you get that 618 retrace, you short into it, stop above the 786, and take a little bit of profit in the VWAP, which should provide some short-term support, and then see if it can get to low of the day, in which you should be riding a nice trade. So guys, I hope that helps. Again, we've kind of coined this trade as the bird box because it feels blind. You're not waiting on that confirmation. Instead, you're saying, hey, the research I've done, this should provide some support. So just remember, when we say the bird box trade, it's really just a support level that we're trying to be with these algos and some of these larger institutional buyers that can't wait on confirmation, or that do not buy breakouts or sell breakdowns. Instead, they kind of have to predict these areas, and we're kind of trying to be on board with those guys. Ladies and gentlemen, I hope that helped a ton. Remember, this is a newer strategy. Always, always, always test it out. See how it works for you. It's going to feel a little uncomfortable at first. Give it 50 trades trading. Even if you trade 2 shares, 5 shares to start this, see if it fits your parameters as a trader. Keep in mind, every trader is different. Every profitable trader I've ever met trades just a little bit different. So if anything, take what I'm doing and make it your own. And let's all make some R's together. So folks, as always, throw in questions if you have them. If you guys are trading with me Friday mornings or Tuesday afternoons or any other RLT team with Jeremy Newsom, Brad Reed, feel free to ask questions as well. They understand this trade and other parameters based around it. So on that note, guys, see everyone later. Have an awesome weekend.